Good turnaround Tuesday, everybody. No FOMO. Well, Brock, so I almost had FOMO on Friday because I think we were here in NAS and I go, new highs look like a layup. And then we had the big sell off on Friday and I go, I missed it. Right. And here we are. So, FOMO would have been, just chasing it and then getting hammered. So, just patting myself on the back. I went through the emotional, oh shit, I missed it. Ever hear yourself say that? Give me a why if you've said, oh shit, I missed it. Everyone in here has. All right. So here's the big question of the day. When's the last time, maybe Brock will know, you're about to see the NAS 100, make a new high. This is the old high. And the S&Ps be this far away from new highs? I can't remember. Can you? So I worked it out for a possible target with one of my mentees in, a couple of guys I work with. And Scott came up with 93.10 for target in NASDAQ. So when we get to 93.10, that could happen anytime. You'd probably see where the S&Ps are. I don't know if they're going to make a new high. Maybe they stall here or here. And at that time, the yen may be running its course. Maybe we're going to get a shot up above these highs to clean out shorts. I mean, where are the stops? Right down here, big breakdown in yen. Going home, I didn't think I'd have another chance to sell it up here to here. I mean, the ideal range is back at the false breakout. So when NASDAQ is up there, I'm going to see where the yen is, and that's going to be a short for me. Okay, I don't think it's all because of that. Okay, I mean, they had some bad numbers in one of the FANGs yesterday. I admit it's part of it, but I don't think it's all of it. So that's just, part of the speculative fever. It's usually not a good sign when things start going parabolic. Steve last week showed all kinds of examples of parabolic moves in Apple and Microsoft, and it's not just Tesla, Billy. In my extremely accurate and humble opinion. Okay, so anyway, that's a feature to me. I'm not ready to fade it. Dixie has to turn. I thought we'd get one more wave down with this market blow off. And oil's trying. Scalped it a little bit here. Still think oil's trying for some type of reactionary low. We need a close over 51.50 to have a 2-day reversal. But your first sign of it doing something right, and it actually is getting back above this this low down here. Okay, this is 50.55. So we're above this low. I mean, who's long anymore? Took out stops here, stops here. The only low that's left is the January low from last year down here. So we might be headed towards here, but this was a pretty big break from the Iranian retaliation, right? What was the high there? Call it 66, call it $16 break. So even a 23%, it's going to be about $3 back. I'm figuring 38% could give you $6, maybe, 55, maybe back to the throw over, and then look out. And if it's going to do it, it should do it now with equities blowing off. So basically some type of sympathy rally in crude. And I think that's about all I have. I'm still trying to hold my long in euro. I'm wrong under last week's low. Kind of held where it had to yesterday and got a reversal. If they could turn it here. Blake was talking about a cup and handle when we were about here. So maybe the cup is getting bigger because this is what I learned yesterday, okay, from Blake. You can always learn, all right? I've been doing this for 100 years and you can still learn if you surround yourself with the right people. So why not do that and hang out in the chat room all day? Who hasn't become a subscriber here in the crowd? Okay, Shahab. If I'm right about the yen, that this is a failing rally in yen, there still could be another wave up in gold. We'll see. Maybe everything that's going on now lasts until early next week. We'll see. Oh, everyone subscribe. It's great. Because where are you going to get this type of research from pros? I know the people that joined. Where's the close? Are happy. Blake had a lot of they're happy. They're happy. So during our promo, the pattern and plays have been pretty good. They've been excellent, actually. So where's Greg at on the euro? Okay, Greg is kind of looking for a rally here. Wow. Okay. B a B. All right. So, first time I looked at this, 114-ish. Okay. So everyone doing okay? Blake,
all right, how you doing?
All right?
You still tap dancing over there?
I've slowed down to a foxtrot.
Doing the foxtrot. No one does the foxtrot anymore, Dale. Just so you know.
Okay. All right. Well, what's that dance? That flamenco.
Oh, the flamingo.
Those
Very
are
nice.
that's a pretty cool dance, don't you think?
Yeah, very.
Heels clicking and it's macho. Anyway, so I take Viagra and do flamenco dancing.
So nice. You just wish you could dance a flamingo dance with some of these some ladies.
Shakira and I are gonna flamenco
Shakira.
dance. And I woke up. Oh, yeah.
Right.
So
So
what, cup and handle still possible in Euro?
I have it hold on really quick. So the way I have it drawn, I mean it's possible.
Yeah. Okay. Yeah.
The
See.
this is the old if you remember here, let me see if I can grab my drawing tool. We had the old inverted head and shoulder pattern, right?
Right. Yeah.
So this is the neckline. It's just retested the neckline. So
Oh, okay. Yeah.
yeah, I mean, is this still possible? It is. It's not the prettiest. Usually when you have a neck cup and handle pattern, you like them to stay a little bit more shallow.
Okay.
Like the 38% would have been optimal. But I
Okay.
mean, it's possible.
Yeah.
I'm not
If anything, as long as that breakout holds, it has potential. I don't think I'd want to stay long back under that breakout.
yeah, if it gets hold on really quick. If it gets back below this
20.
130 level,
Okay.
I wouldn't be too comfortable with it. I
Yeah.
own some euro. I own it yesterday from 110.60. I had to run my son to school because he was finishing up a project. And as I was running to school, this is when we did the dip. But it
Yeah.
didn't get my stops. It would just, bounce. It sold off and came back. And we'll see if we get the same move today. But one thing I want to note with the dollar, and this is something that really it needs to be um, noted, that the dollar, you can see just from Friday's price action. This is, let me go over to an hourly chart. What was happening on Friday? The stock market was under duress, right? The stock market
Right.
was under serious pressure. What
Yeah.
was moving higher? The euro.
Yeah.
There was dollar selling as the stock market was under pressure. Today, the stock market and yesterday, the stock market had rallied back. And by the way, the people are looking at the reasons why the stock market's rallied back. I think predominantly is with all of this stimulus that China has provided, has really stabilized, the equity markets and risk appetite, and risk aversion. It clamped it down a little bit. So as the stock market has recovered, you can take the S&P, you can take the Shanghai, you can take whatever market you're looking at, Nasdaq. I mean, you got Tesla trading at 900 this morning. It's gapping up over 10%. So you got risk appetite roaring back. What's stronger? The dollar, right?
Yeah.
The euro is weaker. You can see it got hit yesterday, then it got hit this morning. So the dollar, especially against like the euro, and that's, over 50% of the dollar index, it's really not a risk aversion tool. It is the opposite of that. So the dollar is not the safe haven currency that everybody believes it is. I do believe, and I know I sound like a broken record. I do believe at some point, if the stock market was down like 30%, people are going to start saying, "Oh crap, I need to buy dollars now because things are getting pretty ugly." But with a 5% sell off, or or a something like that, you're just going to get the dollar moving, more in tandem with risk. So that means if stocks go up, the dollar is going to go up. If the
I
stock
wanted
market,
to ask you, Blake, when's the
yeah.
last time you saw NASDAQ 100 knocking on the door of a new all-time high and the S&P's 50 handles underneath their previous high?
Well, usually that happens. That happens when the market's about ready to surge again, right? Because
I
you look
Okay.
at the Nasdaq as being the leader,
Right.
but I think the Nasdaq right now is being fueled by
Yeah, Tesla, people are
by
saying,
Tesla. But you do
by
have,
everything.
you have Tesla. Google's down, I guess, a little bit pre-market this morning, but yeah, Nasdaq. I mean, it's ripping. I mean, it's crazy.
So that's a bullish sign. So NASDAQ's leading it instead of it being a sign that there's speculative fever and the broader market's not following through. You interpret it as bullish.
Yeah, I interpret it as pretty bullish, but
Okay.
so last night, and I wasn't watching because I was driving around all over the place, like dad taxis do. Um, Last night, the Iowa caucus, I guess, they're counting by hand the votes, and people took that as a positive for equities, but I have to point out, if for some reason Bernie Sanders emerges as like the front runner in the Iowa caucus, that is going to have a negative impact on equities this morning, and we are expected the results today. Now, I don't think that's going to be the outcome. Actually, I really don't, but it could be. So that's something that, as they're out there in Des Moines.
How the Democrats win an election if they can't even count votes at a caucus? That's what I'm saying to myself.
That's probably what a lot of people are saying too.
Anyway,
I
yeah,
think the whole interference, Russian interference, has really played a part in how they're counting votes and whatnot.
yeah.
But anyway, I think the fact of the matter is we have to stay very nimble today. Now, stocks have recovered quite a bit. I mean, you take equities. So we have, let's just, I'm going to tighten that up a little bit. So we're at the 618 retracement in the S&P. And so you guys know that this 3,300 is going to be a big deal as far as the S&P goes. And we're, right at the 618. We're near some recent highs. So you can, see here, you know, we're near some recent highs. So we got to start being a little bit, careful, um, with trying to play equities on the long side up here. Everything that I'm looking at, it doesn't seem like to me that things are getting better in China, or even leveling off. I mean, maybe it will, but and maybe the market is anticipating that things are going to get better, but there's still a lot of travel restrictions, more travel restrictions, and that's just going to limit economic activity, whether or not the coronavirus, starts to level off now, which it could, and I'm hoping it does, but it's not going to dampen the negative impact that we've seen on China and the rest of the global economy. So I would be very careful about trying to chase risk up here. If you weren't a buyer, like let's say, the last couple of days down below these lows, if you weren't buying down here, I don't know if I'd be buying up here. Let's just put it that way. The next question to me is, well, would you short up here? I mean, I am short the S&P still. I've got position in there, but it's small and it's not huge. I want to see, better price action before I start adding. But I don't think there's any reason to be a buyer right here. Then again, like I said, I'm not covering some shorts either. We should talk a little bit about the Aussie. The Aussie is up a little bit after the RBA kept rates unchanged. The Aussie got a lift, and actually, you can see where copper got a really nice bounce off the lows. Now, I say nice bounce off the lows, relatively speaking. I mean, we got absolutely slammed in copper, and you might go, well, that was a big bounce. Was it really a big bounce? I mean, look at how bad it's been hit. This is a pretty shallow bounce as far as I'm concerned in copper, but that also leads me to believe that there still could be more to it as well. We are capped, and you can see here we're capped at a. Let me delete this.
Blake, good morning.
Yes, Steve.
That was the most prolonged sell-off since we have historic data in 1971, 13 consecutive down days, actually.
Really?
Yes.
You mean even more than back here
As consecutive sell-off days, yes, it was the biggest we have on record.
Really?
Mm-hmm.
Maybe a couple of those days were green. Wow. Well, that it's a pretty big move. We are capped by the 24% retracement as of now, and that's shallow, right? If you think about it, you're like, okay, well, yeah, we had a nice bounce in copper, but if we can't get much above right here, like this 260, 265 level, I don't know if I'd be a believer in what you're seeing in copper. I mean, copper looks vulnerable, and these are really, really important support levels, obviously. But like I said, the bounce in copper is far from convincing to me. I'm not looking at it going, wow, that's the most convincing move I've seen. Now, there's a couple other things that I really want to point out. So let's, I know you guys are probably looking at the euro and you're like, oh man, the euro's not, it's not really doing much, and it isn't. It's really just kind of sitting there. But I want to turn your attention to these pairs really quick. Take a look at the Euro Aussie. Okay. So the Euro Aussie, I've been really bullish it. And let me get rid of this because these are, you had to go over to a 4-hour chart to see what I was doing back there, and back then I was really bullish the Euro Aussie on this breakout, broke out, You know, it's during the whole coronavirus thing, we, you know, rallied pretty sharply. Let me get rid of all this stuff. Okay. So we rallied, no, I'll get rid of this too. We rallied sharply. We've pulled back. But if you look at the Euro Aussie, like longer term, you know, this is really, and I guess I should go like this. Here, let's go over to a weekly chart. That's probably better. Yeah. You look at the Euro Aussie here, and we've got a really, really nice base building. And I know, you know, you're probably like, well, I don't want to buy it right now. And I don't know if I'd really want to buy it here, but a little dip down towards, you know, this 163.50, maybe another 70, 80 pips down here might not be a bad place to start looking for longs. If you think that this global economy is going to slow due to, you know, the coronavirus slowdown in China, let's say, you know, uh, we got the State of the Union tonight from Donald Trump. How about if you know, and they're making pleas right now for us to relax some of our requirements on the phase one deal because of what they're dealing with. But how about if he stays tough on China tonight? This, remember, State of the Union, this is his State of the Union, but B, this is also a political speech for Donald Trump, right? This is the year of the election. This is when he's going to talk tough, if he's going to talk tough, because he wants people to believe he is tough on China. How about if he doesn't, you know, if he's continues to talk tough, it's going to lead us to believe that we're not going to lax some of those requirements on the phase one deal. And you could see further deterioration in the Aussie, even though the Aussie's had a little bit of a stabilization overnight. But it's not just the Euro Aussie. Look at the Euro New Zealand. The Euro New Zealand, and this is I was looking at this pennant, right? We rallied to the 50% retracement. I've got this little pennant, and you can see I have alarms set all over the place because I'm looking for this to continue higher. And if we do, I'll take you over to the weekly chart of the Euro New Zealand. This is a big base that the Euro New Zealand's been building, and frankly, a break above, you know, 176, which is 500 pips away. It's not like we're going to get there tomorrow, but well, maybe we will. Who knows? But this is one of those charts that I'm really paying close attention to. I've this whole last month, I've made a lot of my money, and I had a good month last month, which is I'm happy about. But I've made it in some of these non-traditional pairs, you know, non-major type of pairs. And you know, and I've made a lot of money in the Euro Aussie last month. I played the Euro New Zealand alongside, and look, you know, this one has the potential of really ripping higher, and especially if risk aversion picks up, coronavirus doesn't look like it's improving, China US relations, they're still rocky. You know, and during a period of rally that we've just seen over the last couple of days, typically what happens with the Euro New Zealand is you will see it reverse, you know, but it hasn't. And that's the point I'm trying to make here, is it's not selling off. So if it doesn't sell off, the risk is starting to build for an upside move. The Kiwi also looks weak against like the Aussie New Zealand. If you look the Aussie New Zealand, we've rallied off of these lows, and I'm actually looking for the Aussie New Zealand to, you know, continue to pick up steam till we get to about 104.5. So the Euro New Zealand might be a place where you keep your eyes on, just in case, you know, we continue to see a deterioration in stocks. Like, let's say stocks level off here and reverse towards the end of the day. Let's, you know, we'll just, you know, for argument's sake, let's say Bernie Sanders is the you know, looks like the front runner in the Iowa caucus, and, you know, stocks come under a little bit of pressure. Well, you know, the Euro New Zealand might be a place where you turn your attention to, because that's what I'm going to be looking at. I'm going to be keeping my eyes on, you know, what's happening with this this pennant. So I'm really looking for like a breakout above like 71.50, you know, breakout above 71.50, and it looks like, you know, we might continue on here. So and that's kind of what I'm looking at today. And I'll see if the euro can stabilize around these levels. We have some options expiring in the yen at 109. Some options in the euro are expiring at 110.30. So down here at the 618, really, we have some euro expirations that are happening today, and that's just something else you got to probably note going into today's trading. But 89 or excuse me, 3290. 3289, this is the 618 retracement. 3300 is going to be a big resistance. All of this, we're heading into some pretty big resistance, so it'll be interesting to see how stocks respond at the open today. And good morning, Steve, how you doing?
Good morning, Blake. I'm good.
So it seems like right now my internet is working, and it's been up since last night, so I'm kind of happy about that. I don't want to jinx it, but we'll see if it can continue.
Let's hope
I've had
so.
this happen to me a few times since Thursday, since that node went out. It's been intermittent, but it seems like it's been on pretty consistently for the last 12 hours. So we're gonna hope that this is it.
You're good now, bro.
Yeah, I'm hoping. Well, guys, I'm going to pass it over to you. But remember, if you haven't tried out Forex Analytics, make sure you do so. It's only $1 for 10 days. And visit our webinar sponsor. Somebody was in our chat room asking, or as HG was asking about FX options. And, the best people to ask is Forest Park FX. And they'll nail down every broker that offers them, and they'll figure out what kind of trader you are, see if what broker is best suited for you, and you can contact them via Skype or email right here. And it's free to contact and reach out to them, because you might be able to get into the reimbursement program where you could be part of the Forex Analytics community due to your trading, how much trading volume you do. So, all right, guys, I'm going to pass it over to you.
Thanks, mate.
Have a good one, Blake.
Thank you.
Have a great one.
See you later.
How you doing, boys?
Hey, Tesla bears.
Man, it's crazy.
Let me ask you, guys, have you looked into I don't really know much about, the alpha, beta, gamma, but I would assume with this kind of volatility, any kind of long option, whether it's a put or a call, are expensive. Is that true?
Yes, they are expensive. That is true.
So do you have to write something against it when you do a trade like that? Or if you want to top pick, what do you guys
No
think?
reason.
We're talking about buying puts, so your
Yes,
downside. Exactly.
out of the money.
Okay.
Out of the money.
Out
puts.
of the money
Okay.
puts. Yeah. So, but
Even though they're expensive.
Yeah.
It depends on how much out of the money they are. The benefit, the huge benefit with Tesla is going to open like at 900.
900, I heard. Yeah.
Yeah. So just look at this, and we're going to open up there.
Jeez.
Yeah. So the benefit with moves like this, which are totally parabolic, Tesla is going to be worth more than 4 times BMW today. So the benefit with that is that we've seen these kind of moves multiple times in the past. And the good thing about these kind of moves is that you can buy decently out of the money puts. So if we open, let's say there, you can buy rather cheaply puts there. And, when this move fails, it can, within a month, it can come back down there easily. I mean, we've seen this type of price action many times before. So
Volkswagen 2009, yes.
Yes, exactly. So volatility does make options more expensive, but parabolic moves like that give you the ability to buy very out of the money.
So many gaps.
Yeah, very out of the money puts, which makes them cheap, because despite the volatility, being a lot out of the money, plays a huge role. And still within a rather limited amount of time, have the price completely reverse and start going the opposite way, more or less with the same type of momentum we've seen to the upside. So that's the whole concept.
One thing I used to do, I barely remember, but I haven't traded options in a while, but when I would have doubles, I'd sell half and make it a free trade.
Yeah, I mean, money
Yeah.
management,
Yeah.
many ways to
Just
skin the
because
cat,
of
right?
time decay and stuff, Anyway.
Yeah.
All right. Yeah, that's amazing. Okay, I'm going to pose the same question to you. And if people are saying it's Tesla, guys, it's not just Tesla. But when's the last time you saw the Nas 100 knocking at the door of a new high and the S&P's 50 handles underneath their previous high?
No, it's okay. It can happen. If you remember,
I
yesterday
don't remember.
I was showing Nasdaq saying that for the time being, Nasdaq seems like it's creating a triangle there. So it can actually produce a new high. Now, will that new high come with an existing divergence in the S&P? So can actually the Nasdaq produce a new high, S&P not following higher, and then having an actual divergence by seeing new highs in the Nasdaq and not new highs in the S&P? And I'm not saying that happening for a day. I mean, actually seeing Nasdaq reverse lower once again without S&P having produced a new high. That will be a nice signal, right?
Yeah.
That will be a nice signal. But we have to be a little bit patient because this is what I showed yesterday, this potential triangle, and we're currently knocking on the door. So
Right.
this is what we drew yesterday. I haven't touched this chart. So yeah, I mean, we can see another push towards like 9,500. Yeah, why not? I mean, this market is nuts. Nobody says it can't get more crazy than that. Now, S&P obviously, some distance from that. As Blake said, 3,300. It's where I have my stop loss as well. I'm going to be out at break even there.
Anyway, my
So
take is it's unusual.
it
I
is.
haven't seen this in a long time.
It is,
So
but a lot of
if
unusual things
there may
happening.
be a market message in it. Was
Yeah,
my point
as
last
long
week.
as long as Nasdaq produces a new high, then reverses lower, and S&P not having produced a new high, that's going to be another divergence because we already have the prolonged divergence of the IWM, which for so long hasn't been following the other indices in producing new highs.
Well, that's what I mean. That's been happening for a long time.
Yeah. Now, if
relative
the
weakness in
S&P,
Russell, but
yeah, now if
S&Ps and Nasdaq been
yeah,
trading
now if
hand
the
in hand.
S&P gets
All right.
added to the list of indices that are
Okay.
diverging,
It's no big deal.
that's going to be another signal that momentum is definitely waning. And Dow Jones is even a little bit weaker than the S&P. So let's see, it's going to be interesting. But all the rest of the indices have had a very nice rebound, as Blake mentioned. We have no real data that indicate that the fears about coronavirus should be receding. I mean, we don't have any real positive data indicating that the spread of the disease is like getting much better, or we haven't had any breakthroughs in vaccination or whatever. Nothing that we didn't already know. I mean, in 2-3 days ago. But we are seeing a reaction. I mean, I mentioned yesterday that the Aussie was testing a key level of support, and that was important. We're seeing a rebound from there. I mentioned yesterday that crude was at a very key juncture. Yesterday it closed below it, but today seems to be reversing. The USD yen, we had already mentioned that it was testing major confluence of supports. It has held. Copper, Blake already showed it. Was testing multi-year support and a very important area after the longest down move we've recorded in history. And this is what we drew yesterday. It hasn't changed. I drew that we might see a rebound from there, and then what happens from this area is going to be quite important. And we managed to rebound up there within a day, so let's see what happens from here. I mean, definitely a breakdown from yesterday's lows is going to be like huge as a development. But copper was like extremely oversold. The RSI went from overbought to below 20 daily RSI within like 2 weeks. So we might see a relief rally as well there. Palladium, instead of consolidating as it was doing like for 5-6 days, has also gone parabolic. Now I was stopped out overnight at 23.65. I had moved my stop loss, so last part of my position was out for 2.6% of a profit. Still I made a good profit in those two halves, like roughly 4% on average on the whole position. But to be honest, I'm a little bit disappointed because I really wanted to see a move towards 2000. I was hoping that that's going to be like a huge home run. But I don't know. I'm going to see what's going to happen from here. I might short it again. Depends. I definitely didn't expect this type of rebound. I was expecting a breakdown, but it is what it is. I mean, Palladium went very much beat once again. So it is what it is. Gold and silver, we're seeing some weakness here, but nothing has changed from a technical perspective. I mean, same type of thing. I mean, they're still consolidating in a bull trend. So nothing to write home about that has shifted my bias. Stelio, by the way, did we have anything overnight?
Yeah, well, a couple of things, but you were on a roll, so I didn't want to interrupt you.
Yeah, sorry.
First of all, Blake mentioned the Iowa caucus, and
oh yeah,
I mean, they have problems in counting and all sorts of stuff, but Bernie Sanders does look like he's in front. So this is something that I agree with Blake. I think risk markets are not going to like it that much.
Don't be so sure about it.
Well,
they might be stupidly complacent by thinking that Bernie Sanders coming as the candidate of the Democratic Party is a positive. In what sense? In the sense that they might think that that's like an easy challenge for Trump. So that should be boosting Trump's re-election chances.
I don't know.
I wouldn't rule that out, but I'm certain about one thing. Even if that's the initial reaction from the markets, thinking that Bernie Sanders coming on top and being the candidate for the Democratic Party is a positive thing, sooner rather than later is going to go away, because I'm pretty sure that if we get Sanders being the candidate, polls are going to start coming in much closer than perhaps the market will be expecting. And that's then going to be weighing a lot on the markets, because I do think that this is not going to be an easy challenge and an easy re-election. Trump was elected as an outsider in the Republican Party because people were looking for something different, and they might do the same thing about Bernie Sanders. I mean,
yes, exactly. I think Sanders has a better chance against Trump than Biden does.
I agree with you. I think that Biden, especially with all the issues that we've seen with his diminished, health, etc., might prove to be one of the easiest candidates for Trump to actually disintegrate during the.
Yeah, let's see. Okay, the other issue obviously is still the coronavirus. The markets have just completely written it off now, and
like something happened and we don't know about it. Yeah,
there are obviously there is research being carried out. I think how do you pronounce that company? Gilead, Gilead. I've never know how to pronounce it.
Is it the Italian company?
No, they're American, I think. But anyway, they're in talks with China to develop some kind of a vaccine. But we haven't seen any improvement yet, and the number of cases is increasing. I think it's over 20,000 now, over 400 deaths. It's like I don't see any positive news out of it yet, but clearly the markets think otherwise. So that's something just to keep in mind. And we had some data today, minor data. Okay, obviously the RBA kept rates unchanged. I think there was a tiny probability of a cut price in. That's why the Aussie is performing better today, but they gave us nothing. And we had construction PMI out of the UK, another beat. Last print was 44.4, deep in contraction.
In recessionary territory, yeah.
And came out at 48.4, and 2 points better than expected. So PMI is pointing to maybe a temporary relief, but they're pointing a little bit higher. and the pound has been beaten in the last couple of days. And because Barnier was speaking, and Boris Johnson had a speech yesterday, and they were on pretty much the opposite ends of the spectrum. So on a couple of issues like fishing and stuff. So at the moment, the worries are coming back about Brexit and how, or if any kind of agreement is going to be struck between the two parties. But you can be sure the pound is going to be very volatile. I mean, it's insane. We have people in the chat room who keep shorting rallies, and others who keep buying dips, and they're both sides can make money. That's the amazing thing with the pound. Yeah. So
and to be honest, the pound, since you mentioned it, having said all that and having seen the big move lower yesterday, the bottom line is that it hasn't broken down. So yeah, it was quite a negative day yesterday, but we held this horizontal support area. We're holding this ascending channel as well. So so far, I mean, yeah, quite a negative day to start the week, but so far no technical damage yet to the pair, and
by the way,
that is something to note.
The company is Gilead. Thank you to our friend who pointed it out on the chat here. Thank you, Gilead. There you go.
Okay.
That's it for me.
Anything else?
That's it.
Okay, so now that we actually had a look at the pound as well, so my thesis remains here. I mean, above 129, 129.20, you should be careful being on the short side of pound, because nothing has really changed from a technical perspective. Now, if we do see the pair slashing through that area, I would then be expecting a deeper correction, perhaps towards the 200 daily moving average or so, before moving higher. And yes, my thesis would remain that we might see more strength from the pound, even if we break through these levels. Although if we break through these levels, I do expect a follow through to the downside. So I would expect at least a couple of 100 pips to the downside. So that means that you can actually make money trading the breakdown as well, even if I'm right that we should have somewhat of a limited downside towards perhaps 127, 127.50 before more upside. But I do think we can easily make it towards 127.50, if not a little bit lower, if we break through 129.20. So that's what I think about the pound. Let me open the question box as well and see what you guys want to. Gilead, yes, I want to pronounce it. Says, good morning, good morning. Cables on the move of range lows. Yes, I just covered that. So yes, above 129.20. As I said, be very careful with the downside, because you might find yourself. Martin says worth more than BMW and Volkswagen combined. Needless to say, which is extremely important. It's not only that the market capitalization of Tesla is ridiculous, it's also the fact that Tesla is still burning cash. So Tesla's future is still a huge question mark, because it has to keep funding itself one way or another through issuing more stock, getting more loans. Probably the latter is out of the question, knowing the history. So issuing more stocks more likely, while companies like Volkswagen and BMW are actually making a lot of money, right? So we're talking about healthy companies that their future is almost guaranteed, almost in the sense that nothing is certain in this life, and certainly there is nothing 100% sure in investing. But if you had to bet which of these companies are going to be there in a year or 10 years from now, you would have to be nuts thinking that Tesla has the higher chance. As simple as that. So Tesla being worth more than BMW and Volkswagen combined is like, I have no words for it. It's like lunacy, literally lunacy. Because I really strongly believe that after the next recession, Tesla might not even be around. So we've seen that happen in the past. I mean, companies going parabolic and then going out of business. So Tesla can go out of business. BMW and Volkswagen actually almost can't. So, but yeah, it's another sign of irrational exuberance as Shiller's book in this market environment. Not the first, probably not the last as well. The recent example of WeWork that just got spared of bankruptcy at literally at the last moment, and the main reason why they actually saved it was because they didn't want to book the huge losses. So they're making an attempt to actually save it. Is the most recent example of that kind of irrational exuberance blowing up. Hi, could you please evaluate Aussie Kiwi? Yep, actually, we had a look at Aussie Kiwi yesterday. You might have not been here, so I have no problem having a look at it again. What I said yesterday about Aussie Kiwi, and still remains to be the case, is that the Aussie Kiwi was actually testing again and again these channels. You can see this ascending channel, these channels trend line support, and I said that the more it fails to actually produce a decent rebound from there, the higher the chances that it's just going to plummet through it and continue the downside. So after having said that yesterday, it decides to produce a more decent rebound today. But has this really changed things from a technical perspective? Not really. I mean, in order for things to start looking a little bit different here, at the very least, we should look for a higher high. So let's say a move above 1046. Until it happens, this is like a consolidation near the lows. We did have an RSI divergence, and it's now playing out. But I would be quite careful. I mean, risk reward might still favor long positions against the lows, but marginally now. I mean, it was more of a case until yesterday. So, you might want to play it to the upside. I mean, the risk reward is there. We're still quite near this channel's support, but keep in mind that, Aussie Kiwi remains quite weak, right? And, today's reaction was due to the Aussie responding from a very, very, very important support area, following what Stelios said. I mean, the RBA holding rates there, while there was a small chance that we might have had a cut, but that might not be worth more than a couple of days of a rebound, right? So Aussie remains extremely weak, near multi-year lows, and there is no guarantee that it's not just after a couple of days slice through that and keep on depreciating the downside. I mean, the Aussie would have to do a lot more to start looking constructive. It's for the time being, it's quite bearish. Of course, the Kiwi is looking better, but not that much better. I mean, it's some distance of its lows, but it has still broken through that ascending channel. If you look at price action since the summer of 2017, we have had a series of lower highs, and that is like the definition of a downtrend. So it is what it is. I mean, not easy to buy these two pairs. Anyhow, you want to be buying them. Your risk should be below 64 for the Kiwi. We have this confluence of supports at 64.15, 61.8% fib, and horizontal support area. For the Aussie, it's the multi-year lows at 66.70. So you want to buy them. You have a very, very manageable risk. Now the chances of this playing out are probably not that high, but the risk reward at least is there. Now, having to do with the Aussie against the yen, this is also one I mentioned yesterday. This is what we drew yesterday, that it was testing the 61.8, and some type of a recovery rally could come from there, and there it is. I mean, it's starting today. Having said that, I would pay close attention to 74, 74.20 should act as a resistance. So, I wouldn't be, keeping my hopes very high because, we might see a couple of days of a rebound, and, if we get rejected from there, I would be looking for more weakness towards 70 once again. And here is the Kiwi yen rebounding from the 50% fib. I also mentioned yesterday that that was also the breakout area from consolidation we had back near the end of 2019. But same case here. I mean, we might see a short-lived rebound, but I wouldn't keep high hopes that this can prove to be sustainable. Same deal here with the USD yen, rebounded from this nice confluence of supports, wedges trendline support, the 200 daily moving average. But unless it breaks through this long-term descending trendline resistance, risk reward isn't just there. I mean, we're still very close to this multi-year resistance, and against that, I think you have to prefer the downside. Now, if we manage to break through that, that's a totally different game afterwards. But until that happens, I have to maintain a bearish bias. So as simple as that. So given the fact that USD yen is, rather close to multi-year resistance, given the fact that the Aussie and the Kiwi, remain in what is the definition of downtrends, I would be very, very skeptical in buying the Aussie yen and the Kiwi yen. I would be rather selling rallies than buying dips. So that's my thesis. Question about the euro yen. How do you see S&P and Nasdaq trading in coming sessions? Yeah. Okay. Now let's first cover the euro yen, and we're going to go back to the indices. So here's the euro yen. Broke through this ascending channel. Against it, I would be careful. So against this broken trend line support, which might act as resistance, I would remain rather careful. Now, if we break through that, then we have a different formation we can be talking about, and it's this rectangle. There is the resistance. There is the support. So, I think that, if you want to look at it from that perspective, that should be the trade here. Okay. You can play the breakout, either from resistance or support. That's one alternative. A second alternative, you can just sell a retest of this broken channel for a move lower. So, these are the two approaches that make sense from a technical perspective here, if you're asking me. Now, having to do with the indices, I said since yesterday that the Nasdaq was failing to show, the type of weakness I would want to see because it hadn't produced a lower low, and that left the possibility of a triangle here, and that's what we're seeing now. And now we're testing resistance once again. So I have to admit that Nasdaq producing another high here looks like a high probability scenario. The question would be, is the S&P going to follow, or is the S&P going to diverge? Because if the Nasdaq produces a new high and the S&P hasn't, and we see the Nasdaq roll over from there, I think we can see a rather strong move to the downside. So it's not easy to be selling. I mean, I'm still short, and I'm nearly close to getting stopped out at break even. So if that's the case, I will have failed to book some profits here. But since the beginning, I was in for a bigger move, and I said if that happens, fine. If it doesn't, it was a de-risked trade, so fine with that as well. But it's not easy to advocate for selling until we see Nasdaq, in essence, breaking down as well, and that hasn't been the case yet, right? On the other hand, we also have the VIX, and that is a decent signal, meaning as long as the VIX is staying above this broken trend line resistance, I think the chances are, for another high in the VIX. So, you can use VIX as a signal as well if, that was a false breakout there, or, there is more to come. And I think, there can still be more to come. So, let's see how today is going to play out. I mean, we've seen a nice rebound in the risk assets, but I'm unconvinced yet about it. Okay, so I wouldn't be just buying a 1 day of strength without any real, data or news to actually support it. So that's my thesis here. Europound. So Europound did close yesterday above the trend line we were showing. Let me pull it up. And now it remains to be seen if this was the real deal or not. I mean, it has moved lower now and retesting this channel's resistance and support. So, if Europound is serious about making a move to the upside, it has to hold here. So I think that, let's say, as long as we are above 84.50, risk reward makes sense to be long against the 83.90 lows. I mean, you're going to be risking 60 pips to see a move towards 87 cents, with 86 cents being the first area of resistance. So 86 and then 87 cents. Now, if for some reason it keeps moving lower and closes below this channel, then, it's just a false breakout. So today is going to be quite an important day to determine if Europound has actually the strength to put on a new high from here or not. I think it's still a decent opportunity to try to buy it against the lows for another leg to the upside. That's how I see it. Let me see if there are any questions I haven't covered. FX trader, dream on body. I'm long Tesla since 50 USD. Okay, so you think Tesla can go to what kind of number, or how many times the valuation of a company like BMW, Daimler, and if that's your thesis, what is your fundamental idea behind that? I mean, based on what exactly? I would really want to know. Question about crude. So crude closed yesterday below, this zone of multiple supports, but so far rebounding nicely today. It's going to be quite an important close. I mean, as long as we stay now below 51.50, it's very hard to advocate buying it. Now, if we manage to close today above 51.50, then we can be talking about like a 1 day false breakdown, in which case I would be looking for a larger rebound, but don't imagine something huge. I mean, I would be looking for a move towards like 54.50, 55, somewhere there. So, quite an important day for crude as well. I mean, many instruments are actually at key junctures here. We had very different price action Thursday, Friday, and yesterday and today. So we need to see which of the two couple of days were actually the real deal or fake before we can determine what's happening here. Gold falling, yes, gold is falling, but the question is, has gold actually done anything to violate the bullish bias here? And the answer is not yet. So against 1550, I would be careful in being short gold. Now, if we break and close below 1550, then we can start talking about bearish scenarios. But until that happens, I would be careful. I would be careful because gold remains very well bid. People have been trying to fade gold strength for during the last couple of months, and that hasn't worked out nicely for them. So you'd rather get some confirmation than being another victim trying to short gold at the wrong area. Coach,
Yep.
is natural gas still going down? The answer is that natural gas is not going down today, but it hasn't really rebounded either. Let me pull it up so you can see it. It's near the lows. There you see. So natural gas still consolidating, at the lows. I wouldn't rule out another leg to the downside, but I do believe that natural gas has started looking very appealing down here for a larger rebound. So it is what it is. I mean, we're trading right on the 127% extension. So, hard to advocate that somebody should be long, but on the other hand, knowing that this is a tangible commodity with actual costs for producing it, we've gone quite low, and much lower than that, it's going to start not making sense. I mean, it's going to start being at a level that is going to be unsustainable due to costs of production, etc. In the medium to long term. So I think that if you're looking at the long view, I think that the next big move for natural gas might come to the upside rather to the downside. So I wouldn't be trying to collect pennies in front of the upcoming train here in natural gas being short. That's my point of view. Coach, do we have an interview today?
We do, and it reminds me of the expression of when you go to a discount store, Steve, and instead of paying up for a good brand, you buy something cheap. When you bring it home, it breaks.
Yeah, and then you
So
have to buy
just
it again.
because it's cheap,
Yeah, it doesn't mean
it
that
can
it's good
still
value.
break.
Yeah,
It can
it
still
doesn't mean it's
break.
good value. Yeah,
Anyway, that's my retail
I'm with
expression
you.
for the day. So yeah, Alex is with us. Alex is a great technician, so he's ready to go. Thank you, Steve.
Let's go then. Good.
All right, so Alex, welcome back. And let me unmute you.
Okay.
Welcome back to Face, Alex. How are you?
Thank you very much. How are you?
Good. Glad to have you back here. It's been a while, and always gleaned something important from your work. So I don't know if you've been in Zoom yet, but there's a green share box. You just hover your mouse over the drop-down menu and you'll see it. And then you click it and then select your screen you want to show us today.
Okay.
See it? Green box says share.
So I actually cannot access Zoom, but I don't know why.
You're
What
not
do you
on
mean?
Zoom?
We can hear you.
You're on Zoom.
Yeah, I cannot open the window for some reason. I don't know why.
It might be minimized. Usually, it becomes a small window at the top right of your screen.
Got it.
You see? Yeah. And you click the little arrow, then it becomes large, and then you can see all those buttons Dale was talking about.
It'll say share, green box.
So once you maximize it, can you still hear us, Alex?
Yes.
Here we go.
Okay, perfect. And
All right,
yeah,
he's
there
good.
we go. We can see you. Okay.
Okay.
Enjoy
Fine.
the interview. Bye.
All right, thank you, Steve. Okay, Alex. So we had that big break. I just want to start off with a question for you, because to me it's pretty significant. I haven't seen it in a while. what do you make out of NASDAQ knocking at the door at a new all-time high, and the S&P is about, I don't know, 35, 40 handles underneath their, maybe even 50 under their old high?
For me, it's a clear sign for not a really healthy market, market without a decision.
Okay. All right. So, I'm just guessing because I don't do a lot of internal work, but, the S&P, a much broader measure, probably the broadest, unless you start going to the Russell 2000 and, some of the other measures, that breadth most likely is deteriorating on this rally. Probably not going to get, some of the internals will be ugly at new highs in NASDAQ. So,
Yeah.
to me, it's a warning sign. DAX is your specialty in indices. So the DAX actually had a bigger break, deeper break, and it's been weaker on its advance too compared to U.S. forces.
Correct. Absolutely right. Yes.
Yeah, it's more like the Russell. So, what are you seeing?
It's actually a quite good timing for today, because you see that huge green candle here, with a huge gap from yesterday. I start with that chart because it's just a technical chart, and I wanted to look at the moving averages here. The green one, the MA50, the purple one, the
200.
MA100, and the yellow one down here, the
okay.
200. So,
Okay.
What we saw on Friday, we broke the Bollinger Band, the lower one.
Yeah.
Yeah.
Yeah. I
And
see it.
we actually closed below there. And then it was the weekend, and that action opening above on the Monday after a sell-off is the one story, but not taking out the low of the previous Friday when it sell off, that's very untypical for DAX. Yeah.
Who bought the close Friday? That's what I want to know. I want to know what kind of technique they used to buy the close on Friday.
I don't know, because it was
just it had to be a coin flip, bull on one side, bear on the other. So
I mean, the U.S. market was the front runner. There was no action in the European or German market. So the DAX basically did what US did. So I don't know.
Almost looks like you have an island top in DAX with all that gapping action, gapping up towards the highs.
Yeah.
And then pulling back, and then the gap down leaves like about a 2-week island up there. See that? That's just an island because it gapped up to that level and then gapped down, and left all of those people are trapped on the island. It reminds me of the series Lost.
Okay.
You ever see Lost, Alex?
Yeah.
They're on this island right now. How are they going to get off the island? I mean, maybe it rallies back to your 78.6 level, but they'll still be trapped on the island. So maybe they'll have some hope if we rally up towards what you have labeled as 78.6, that area.
That area, yes.
Yeah, what are the fan lines going to tell you?
I like that confluence here.
Okay.
And I'm pretty sure we get it today, probably with US opening bell. And I like that gap here, the 346 area. I mean, that's reasonable to reach. What I don't think is that we go to that gap up here. So the area of interest is definitely here, from 270 up to 350. and then it will show. For me, it's still a sell because, as I said before, I don't like that formation, and I first want to see DAX here on the ME 100, probably lower by end of February.
Okay, so what are you looking for? Maybe about 10% from the highs here in DAX?
10%, yeah, something between 5 and 8.
Okay. All right.
I mean, if things go really bad, and we all know that China was the great catalyst in every single market.
Great point.
And I still don't underestimate this thing, because this is getting huge.
Okay, so that's an interesting point, and I was talking to someone about it, during times like even during the Great Recession, China didn't get hit as bad. They weren't as hit as bad as we were. And part of the rationale for us coming out of it was China's strength leading the way, the global economy. And so if they could pull us out of something,
yeah,
they can, you can't have it both ways. That then it doesn't matter if they have weakness. So I was thinking that, a lot of people comparing this to SARS, and it's so different as far as the curve of infections is like parabolic on this compared to SARS. And the other point, Alex, is, China was growing even though it was fabricated.
Yeah.
And the numbers are still fabricated, but they were fabricating 8, 9, 10% growth in 2008.
Correct.
So they were in a stronger position to deal with the crisis. So they lost 80%, 90% of their hog population. They now have crop problems. That's why they've been stockpiling wheat for many years, something called an army worm attacking their grains. And now they have, besides trade sanctions on them, they have this virus. So,
yeah,
it's hard for me to think that it's not going to mean anything eventually.
I mean, the first thing, it's a human tragedy. That's
good point.
The very top, but don't underestimate the economic consequences. And what I think, China will be capable to get it somehow done, probably in the country, but as soon as the thing is spreading, imagine India or whatever, I think this is getting out of control then.
Okay, so you still have think it's possible that we're taking this too lightly, and this could be the unexpected black swan.
Yeah.
Okay.
Correct.
So then maybe what we should be looking at is something, even what we're looking at here, a daily chart. Maybe we should be looking at some of your weekly work, and to give us more of a, or anything you want to show. Anyway, so go ahead. So you think eventually we're going to get at least a test of the 200-day down there?
If things go very bad, then we see the 200 MA.
Okay.
Yeah, but that's 700 points away from now. So I mean, that's not a big deal for DAX.
That's what I mean. If it's a big deal, you probably need to look at weekly and monthly charts and start looking at retracements of this whole bull move.
Yeah.
For what can really happen here if it's bad. To me, I think it would be a victory to hold 12.5. What do you think?
Yeah.
All right.
It's probably could. So okay, let's switch to my specialty.
Oh yeah, here we go. You got
you like that, huh?
They laugh at me here, Alex, when I talk about lunar and solar eclipses.
Yeah, don't ask me. It's the same here.
Yeah. Anyway, let him laugh.
Yeah,
I can just shut the window on my pyramid
yeah.
and put my earmuffs over my tinfoil hat. I don't have to listen to him.
Just,
All right. So what do you got?
to everyone, just look at the chart and build your own opinion about it. I mean, those numbers are not faked. Those are the accurate dates of solar and lunar eclipses.
Yeah.
And we see how the market responds to that. And that is clearly shown that we ran into a top or turning point. I won't say top. I say turning point. I call it turning
Right.
point here.
Okay.
So yeah, and in my model, those events are always the beginning or the start of a new cycle.
Okay. Do we have anything coming up?
Actually, not so soon.
Okay.
Yeah.
All right. So we have no eclipses. Why do you follow just Mars oppositions or conjunctions? Why just Mars?
A good question. From backtesting,
didn't Gann cover, that certain planets meant certain things as far as oppositions and conjunctions?
No, I was backtesting this data like 100 years ago, and Mars gave me the highest, or it's one of the planets which give me a high significance for that.
Okay, cool.
Yeah.
Saved me some time. Because I used to, I look at all of them and pay attention to them, from a.
No, that this is getting confusing. Absolutely confusing. You have to get your favorite ones, which might have an impact on the market cycle, but it's impossible to get all those conjunctions and oppositions and.
Yeah, I was more interested in oppositions.
And it's
conjunctions.
In reality, it is for me. It's not an astrological aspect. For me, it's the astronomical aspect because it serves as the most perfect timing machine.
Okay,
that's the point.
Okay. What else do you have to show us here today?
So, what else do I have? Yeah. Back to those cycles. Again, the Mars opposition highlighted here. Back to my Gann models, which I'm running on daily and the shorter time frame, and on the daily chart, the 144 trading or calendar day cycle is the one thing which interests me most. So all those time spans are either 144 trading days. That Balkan means bar, so it's 144 trading days, and the T here would be 144 calendar days. So just see here from top, low to top. I mean, for me, it guides me through upcoming turning points of the market.
All right, so where are we on your work now then, between your planetary and Gann work? Where's the market sitting, and when's the next significant time frame, and it looks like we didn't really have any kind of significant time frame
Not really,
at
because
the high. At the high
because
up here.
that high for me it was how should I say?
Just a
It was,
temporary high, a
mm,
high, not the high.
well, it was pretty much pumped. What we saw after New Year, after Christmas, it wasn't rational for me. We had the Iran crisis and in the beginning
Okay.
of January, and as soon that was settled, the market went higher and higher and higher. So, and then China came. So basically, for me, we are in the middle of nothing now, and
Okay.
we have to wait, or I have to wait to get some order again into the chart and into the cycle.
Okay. So
Um,
sit on your hands until. Okay.
I think
Okay,
that's
you have
why
some-
that's
Go
why
ahead.
that's why today surely will be important.
Okay.
As soon as U.S. markets opened, to see if that counter reaction from yesterday and today is valid. So I
Okay.
don't.
All right.
I
So
still
today
don't
we
think it,
need
but
to see if we're going to fail from this gap
yeah,
or
correct,
try a higher level.
correct.
Because right now it looks like what this gap is about halfway back of the decline. We could,
Yeah.
it may not be enough. So you sit on your hands. What are the dates on the right hand side signifying? 8-1, 4-1, 3-1, 2-1.
You mean this? No, that's
The dates.
from the Gann angles.
Oh, I see. Okay. Okay, that's where they'll come in time. All right. Okay.
Those are the
1-1.
Gann angles. Yeah.
I see. Okay. So we still have a Gann angle above it too.
Yep.
Right? Okay.
Yep. But as
All
I
right.
said before, I really love that confluence, the MA50 with that 3-1 Gann angle here.
So you're going to try it today?
Yep, sure. I tried.
Okay.
I always
And
try.
how do you manage the risk on the trade? Where are you wrong if you shorted up here into this gap?
If I really go short here at the 270 area, I will probably let it run slightly above the middle Bollinger Band here.
Okay. And you trade with stops or just mental stops?
I trade with stops. Sure.
Okay, good. Because you know my line about mental stops, right? Have you heard it?
The brain is too weak, so forget
No,
mental stops.
No. The
No, I didn't trade. So
the last time I used a mental stop, my first stop was a mental institution.
okay.
All right. So anyway, all right. So any other instruments or anything else you want to show us today? And I appreciate your candor about.
Well, we can take a look on DAX future.
Yeah.
On the shorter time frame, that's the 5-minute time frame on an intraday basis. Yeah, for me, we are done here. Absolutely.
Okay.
So, and the next target level will be around the 100 MA. That's 960, 970. So I'm really looking for a breakdown again. There is another gap in futures too, right here from Friday to Monday. And as I said before, that low wasn't taken out on Monday. So that's very untypical for DAX. So
okay.
I wanted to see her down.
Okay. So the best way to follow you, Alex, is your Twitter handle.
Correct.
Right? Do you have anything else happening besides Twitter in
No.
your okay. All right, and your arms are crossed. That means you have a little lead on your short, and you look pretty confident there. I want to see an updated picture by the close today.
You like it?
I want you to do a selfie after you get short and see what you really look like when you're
Okay.
trading.
Okay. Deal.
All right.
That's
So
a deal.
all right. So you tweet it to me, and Alex, thanks for bringing your stuff and laying it out there that you're going to give this trade a shot. And
Yeah.
always interesting work. And we're in a little bit of no man's land. I kind of feel that way too. And you know what you do? Do the right thing today, and tomorrow takes care of itself, right, my trading warrior brother?
Thank you.
All right, everyone. That's Alex. Follow him if you trade DAX. He has some very interesting levels for you to pay attention to. Thank you for your time on Turnaround Tuesday today, Alex.
Thank you for having me. Thank you
All
so
right,
much.
buddy. My trading warrior brother, Zextra DAX 30. See everyone tomorrow. Adios. Oh, yeah, I forgot. Don't just count your DAX pips or your S&P or NASDAQ pips. Count your blessings. See everyone tomorrow.
Bye-bye,
Adios.
Dale. Thank you.
See you,
Bye.
Alex.